Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our Clean Energy Metals Conference. Our next presentation is from CoTec. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Bram Jonker, Chief Financial Officer, and Eugene Herken, Vice President Finance of CoTec, which trades on the OTCQB venture market under the symbol CTHCF and on the TSXV under the symbol CTH. Welcome, Bram and Eugene.
Thank you very much, Greg, and thank you everybody for joining us this morning. Really appreciate your interest in our company. Well, we've got fairly limited time, so we're going to jump right in. So CoTec was founded just over 3.5 years ago by Julian Traeger, who is our Chief Executive Officer and also the largest shareholder of the company. Julian is one of the most successful investors and entrepreneurs in the space. He's got a very impressive track record. Julian and I have been working together on and off for the last 18 years. So Julian founded the company on the belief that the mining industry, being one of the few, if not the only of the large industries that have not been subjected or impacted by disruptive technology, and also the understanding that if the mining industry continues to do what it's doing, it would not be able to meet future demand. So CoTec, what the whole strategy of CoTec is to invest in disruptive technologies that are scalable, that are proven. We are not interested in science projects. All of our technologies, at least at the pilot plant stage and past that. So we're looking at technologies that are close to cash flow. Our strategy is to be in revenue generation within 5 years from the date of investment through to revenue generation. And that is truly significant in the mining industry, and we'll speak about that in a minute or two. So the company invests in these technologies, take minority stakes, but very importantly, with the right to go and apply those technologies to targeted assets. And those targeted assets that we're looking at are typically marginal assets. It's recycling and it's reclamation. And through the technology, we take those assets that are not attractive with existing technology, we take those assets and we turn them into very valuable assets. The company and its executive and its board of directors are heavily invested in the company. We currently own between us still over 60% of the company. Julian Traeger is well over 40%. Myself as the CFO, I'm currently, I think, at around about 8%. So just between the two of us alone, we own more than 50% of the company. So heavily invested and fully committed to the execution of our strategy here over the next few years and to unlock significant value for our shareholders. We believe that the company is trading at close to 80% discount to its net asset value. And I'll walk you through that significant value creation that we have created for our shareholders over the last 3.5 years. So the whole CoTec model, like I said, is we are targeting assets that are currently not attractive, but we unlock the value through the application of our technology. The significant advantages of the strategy is first of all that we are not looking at greenfield assets. These assets have already been mined or sort of very close to it. So you have significantly less permitting hurdles, which is a really, really big aspect in today's world. Because we are focused on critical minerals, and you'll see from our suite of assets that we have and investments, we are currently focused on permanent magnets. We are focused on copper. iron ore. So these are critical minerals that typically have the backing of the different governments where we're operating. Also because of our target assets, we have significantly lower capex for our assets, and because of the streamlined process on the permitting side, the lower capex, all of that then combines to much quicker execution and a pathway through to cash flow. And but the benefit that we have is that because we are deploying patented technology, we have a significant barrier to entry. And then there is also, of course, the potential for future liquidity events. And this slide sort of perfectly explains to you the difference between the CoTec strategy and what you have with conventional mining. With conventional mining today, you can have, up to 15 years or more from where an asset is identified through when it's finally being mined. On the CoTec side, like I said, that target is 1 to 5 years, and you'll actually see that where we are, at least with one of our assets, is already at the project implementation stage. So we're roughly 2 years away. And then we also have 2 other assets that's in very advanced project evaluation stage. So CoTec is succeeding in the execution of our strategy to hit that 1 to 5 year target. So what we've done, we're highly selective in our technologies, which is very important. We have to date looked at close to 400 technologies, and we've only invested in 6. And we have a gentleman out of Australia who was the head of innovation for Rio Tinto, who's assisting us in the review of our technology. So we have an extremely strong team. We also have Tom Albanese, the ex-CEO of Rio Tinto, who's on our board of directors, who's also assisting in the review of our technologies. So we're highly selective. And just quickly on our technologies, we have a 21% ownership in a company called Magneto out in the UK. Magneto owns the right to the HBMS technology, which is the recycling of rare earth magnets, which is extremely important at this point in time to us here in the West. And again, bear in mind that we're investing in these technologies with the right to go and apply it. So part of our investment in Magneto, we have entered into a 50-50 joint venture in the United States with Magneto, where we then own 50% of that joint venture, but also 10% indirectly then through our 20% stake in Magneto. We also invested in a company called Binding Solutions. We have 3% interest there, but again, with certain rights to go and apply it. Binding Solutions is essentially the binding, the pelletizing of material at room temperature. It's a chemical binding process. As far as we're concerned, they're leading in the world, and they are testing with most of the major mining companies at this point in time. We also, very excitingly, owns about 3% in a company called Sabre, which is copper leaching technology. And we are already advancing and looking at execution or target projects for the Sabre technology. Sabre is also being tested at the Lomas Bayas mine in Chile, which is owned by Glencore. We are together with McGill University working on the wave cracker technology. Then there's also Salter, which is a gravity mining technology, which we'll be looking at applying to one of our operating assets, which I'll discuss in a few minutes here. And then also Magine, where we own 17% of a technology that's part of a much larger asset package, which is again extremely valuable within the CoTec portfolio. So, but let's jump into the assets, because that's where the true value of CoTec is. Obviously, our investment in the technologies are very important to us. They do increase in value, which is great for ourselves and our fellow shareholders. But where the real money is and the real value is being created is in the application of those technologies to assets that otherwise really have very little value. So, and the first one that we have, which is extremely topical at this point in time, is the HPMS technology that we're applying here in the US. And what it essentially is, it's the end-to-end recycling of permanent magnets, or that contains neodymium, which of course is a rare earth. Some people call them the rare earth magnets or REE magnets. So, and our process, it's patented. It was developed by the University of Birmingham over a period of almost 10 years at a cost of more than $100 million US. It is a short loop system. So it's the only one of its kind in the world that we're aware of. And it will essentially dissolve the rare earth magnet in a hydrogen reactor, which are being built in Germany for us. So it will dissolve the magnet, and as long as the hydrogen can access the magnet, it will dissolve it. So the magnet doesn't have to be separated from its hosting material, which is a critical difference from anything that's out there. And it will the entire process will take 6 to 8 hours. And to separate the magnet or from the host material and to break it down into a magnet powder. That powder is then put through a sintering process and remagnetized, and magnets are being manufactured from that. It's a proven process. The pilot plant's been up and running at the University of Birmingham for more than 2 years. Already a few thousand magnets that's been produced from this process. And Magneto, our partner that has the rights to the technology, they're also building a plant in the United Kingdom as well as a plant in Germany. And both of those plants have received support from the respective governments in Europe. So it's a very advanced stage project for us. We have already completed the feasibility study that's been announced. It's on our website. You can go and look at the results there. Just in short, at the forecast pricing from Adamas, which is the sort of leading research institute when it comes to rare earth metals, we're looking at an NPV just over $500 million. The capex, again, it's fairly low. It's only $125 million. So significant return, really strong economics around that project, and a low entry level capex, which is right where CoTec wants to be. The project is expected to be in the lowest cost quartile. So again, extremely competitive. And where we're currently in this process is we're busy with the detailed design and engineering of the project. We are in the process of identifying a facility to build it. Our first facility will be built in Texas, in the Fort Worth area. We will also have 2 pre-processing facilities, one in South Carolina and one in Nevada. And you will see that recently we've announced a site sharing and a feedstock agreement with a company called ILS out of the United States. So they already have the sites in South Carolina and Nevada that we'll be sharing with them. And the plan is then to eventually also have hubs in both those locations. And then over time, as feedstock becomes available, we can then increase the number of hubs that we'll have around the United States. It's a modular system, so it's unlike the rest of the mining industry where I have to go and build a massive plant. The entire facility in Fort Worth will fit into about 125,000 square feet facility. So we can very easily replicate those facilities wherever it makes sense in the United States for us. Right, so that's our most advanced project that we have at this point in time, and again, CoTec has about 60% of that project. So, at a valuation of $500 million, the CoTec stake in that worth roughly around $300 million. So that I think is sort of a perfect example of how the CoTec model works, where we take a 20% investment that we've taken in Magneto, get access to the technology that's there, and go and apply that. And through the application of that technology, you have significant wealth creation. And like I said, if there's $300 million of value just from the first plant, then you can have the second, the third plant, the fourth plant, and that's how the CoTec value. That's how the CoTec strategy develops and produces value for our shareholders. The next project that we're also extremely exciting about is the Lac-Chenin tailings facility. This is the tailings facility of the old Cartier mine up in Quebec. And this will be our first reclamation project that we're involved in, We've actually been referred to the site by the government of Quebec. So we've had extremely positive interactions with all of the stakeholders. We have already completed our preliminary economic assessment that was done in 2024, I believe. And the project, just based on a part of the footprint of the tailings facility, has already shown us that we can have an NPV of roughly $60 million. Now, again, what we've done there is we've taken an option to acquire 100%, will cost us only $2 million. But we have a project there with an NPV of $60 million just based on roughly half of the footprint. So this morning we have announced that we have completed our 2025 drilling program. So the results of that will now be analyzed, and we'll start with a feasibility study there. We think that because of the expansion drilling that was included in the 25 program that covers the entire facility, we could potentially double the NPV of that project, because we'll increase the life of mine from 10 years to 20 years. And on top of that, we will also be testing the salter technology. You will remember that I've mentioned that the salter technology is a gravity technology that allows us to access the ultra fines. And we think that if it works, that could potentially add another 15 to 25% of value on top of the expanded project. So really significant value. Again, with a very small investment, we have created value which we think will be worth more than $100 million to our investors. Bear in mind that CoTec's total issued share capital is only about 92 million shares. So when I talk about $100 million in value, that alone is worth $1 to our share price, and $1 is $1.40, compared to our current share price this morning of just over $1 Canadian. So this project, again, very exciting, fairly advanced, and an example of how the CoTec strategy works. And I can't emphasize enough: small investment in technology, and then go and find assets where that technology can assist in unlocking the value. We are also looking at other assets similar to the Lac-Chenin project that we can bring into the CoTec fold, so that we can go and replicate this sort of program or strategy that we have developed in order to have a very strong pipeline and eventually have an iron ore division within CoTec. The third project that we have going, again also in the iron ore space, is called Mag Iron. This is a concentrator that was bought out of insolvency about 3 years ago for a price of only $5 million. When we started doing the work on this project, we discovered more than 20 years of feedstock that's there for us. The feedstock's already been mined. There is also a mine attached to it. It's called the Buckeye deposit. So we have a project here with a concentrator with a replacement value of probably around $500 million. plus the 20 years of feedstock. We're also looking at acquiring a pelletizing facility to complete the entire project. And again, CoTec owns roughly 17% of that project. So if you look just at the replacement value, once all the assets are being put in place, you have a value that significantly exceeds the current market cap of CoTec. Now, where we are with this project, currently feasibility study is being completed on it. We've got the pilot plant that's up and running. It's currently running at this point in time. Feasibility study, we're hoping that should be out September, October, towards the end of September, maybe early October. And then we'll go into a fundraising mode for this specific project at the project level in order to refurbish those two plants and to get the project started. I'm going to skip this. I think I've touched on most of this. I think very importantly, just to a brief overview of our board of directors, who I think is sort of testimony to the strategy of CoTec. Lucio Genovese, our independent chairman. Lucio has got a very successful track record in the industry. He's held very senior positions in Glencore on the copper side. And then Julian Traeger, our CEO. I've already given you a brief overview of Julian. Tom Albanese, ex-CEO of Rio Tinto. We have retired Vice Admiral Bob Harwood. We have Sharon Fay, who was the ex-Chief Investment Officer of Alliance Bernstein. Erez Ichelov, he was the head of business development for Traxys. And Margaret Nody, who was the head of resources for Ontario Teachers. So a very, very senior board of directors, which I think should also fill people with confidence. The management team, myself, I will let you, go and read up about this. Myself, I'm a 30-year veteran of the industry. I've raised close to $1 billion for the industry. John Singleton, Chief Operating Officer, also ex-Rio Tinto, and Eugene Herken, which is on the line. Very importantly, this is what I've alluded to earlier in the presentation, is in the last 3 years, we've really created significant wealth for our shareholders. Several $100 million of value has been created. We think that we are trading at a discount of roughly 75 to 80% to net asset value, and very importantly, this is not valuations that was that management sort of came up with. These are independent valuations. On the Laxanine, there's an independent PEA. On Hypermag, there's an independent feasibility study. A mag iron valuation that was independently done and signed off by our auditors, etc., etc. So independently verified value that's been created to date. Quickly on our capital structure, and I'm going to close off with this. I do apologize, a little bit outdated. We're at about 92 million shares, not 89 million shares, but there's been significant value creation. We didn't grow our company through dilution. When we started this, I think our first fundraise was done at about 12 cents. Today, we're trading at over $1 a share, and we like to believe that we're only getting started. Currently, the debt was actually recently converted, so the company is completely debt-free at this point in time. We have just completed a fundraise of $13.5 million, which was 35% oversubscribed. And we have also recently announced a convertible facility of $6.6 million, which is automatically convertible at $1.15 a share if our stock price reaches $1.35. And with that, I will conclude, and I will leave us open for some questions. I see there's about 5 minutes left. Eugene?
Yeah, thanks, Bram. That was really good. Just dive right in here. I think it might be worth emphasizing, somebody had a question about the rare earth recycling facility being worth $300 million for just one facility, and how many facilities do you have planned?
Yeah, so one facility, the feasibility study has indicated at forecast pricing, one facility is worth $500 million. Our interest, our 60% interest is 300 million. I just want to clarify that. The feasibility study was based on one facility down in Fort Worth. We are also looking, like I said, at putting up 2 more facilities, one at the pre-processing site in South Carolina, one at the pre-processing site in Nevada, and then we'll also be looking at further processing facilities, 6, maybe 7, all subject to the availability of feedstock and where it makes most sense for us. But that is the eventual sort of target of Hypermag.
Excuse me. Okay, that's great. And then we have a couple questions here on funding and where we're at with government agencies. Maybe we can touch a little bit on that.
Sorry, would you mind just repeating that?
Yeah, sorry. So there was a few questions around funding for Hypermag and the government agencies. So maybe just touch a little bit on where we're at with funding.
Yes. So with Hypermag, you would have seen that we have announced about 2 months ago that we've received a letter of interest from EXIM, which is of course a government institution. It's the Export-Import Bank of the United States, to apply for up to $92 million of funding, which would only leave about $30 million. We have applied for grant funding from the US government for between 50 and 100% of the project cost. And we are also, of course, in discussions with commercial banks. The idea is to implement project finance there for, probably at least 2/3 of the amount, and then do the rest either through government grants. We also have the opportunity to look at offtake agreements. There is also the, if there's anything left, we can look at some equity financing at the operational level itself. So with all of our operations, we are targeting financing at the operational level and keep the dilution at the CoTec level at a minimum.
Perfect. And then we also had a question about what the arrangement is with Sabo, and maybe we could touch on, how we're targeting assets similar to maybe the Lac-Chenin property, but maybe you can elaborate a little bit on that.
Yeah. So with Sabo, the arrangement obviously is slightly different. The arrangement is that whatever projects we introduce to them will be done on either a JV basis or a license basis. And each one of those would be negotiated individually, but whatever project we bring to them will be done in cooperation with Sabo itself. But no, it's not an exclusive arrangement, but we do believe that through our extensive network that we have in the industry, we're in a very strong position there to build up a nice pipeline on the Sabo front for ourselves.
Perfect. And then I think probably have time for 1 or 2 last questions, but I think one good one here is what milestones should investors watch out for in Hypermag USA over the next 12 months?
Yeah, that's an excellent question. For Hypermag USA, there's going to be the completion of the detailed design and engineering. There's going to be the lockup of a facility, not the lockup, but entering into agreement for the facility itself. There's going to be the financing arrangements. There's the ordering of the long lead equipment, and then there's also the notice to proceed. That will be followed by the building of the plant itself within the facility, and then by sort of the middle of 2027, hopefully we'll be able to announce that that's been switched on. We've also recently announced that we started stockpiling through our ILS agreement, and then of course we'll be entering into agreements with more suppliers, and there will also be the agreements with the off-takers. So a lot of positive things to look forward to over the next sort of 18 months on the Hypermag front, and also on the other 2 projects that we have going. So a lot of news flow to be expected from CoTec.
Okay, excellent. I think we're probably out of time here, but I'm sure any of the remaining questions, and investors can book the one-on-one times with us, and we can further answer any questions that we didn't get to today. So back to you, Bram.
And just in conclusion, so thank you very much for taking the time. We're an extremely exciting story. We as management is heavily invested in this company, and we'd love to welcome you to join us on the road to success here with CoTec Holdings. Thank you very much.
Thanks, everybody.